All right, hold up one second. Are those luxury cars, those promises of instant riches from all these trading experts, too good to be true? Well, we've all seen it, right? Social media feeds are just flooded with all these self proclaimed trading experts. They're flashing these luxury cars and they're promising overnight wealth, riches, exotic trips, huge houses. It's crazy, right? So let's talk about why, if you just blindly follow these people, it's pretty dangerous, and how you can develop legitimate trading expertise. Now, these trading gurus, yeah, they've mastered one thing really, really well. It's called marketing. So just consider that common scenario we all see. You have this individual, they're showing these screenshots of supposed trading profits. They got some charisma going on. They're usually displaying these astronomical returns, right? Like turning 500 bucks into 50,000 within weeks, right? But these claims, they ignore fundamental market realities and mathematical probability. If you were achieving these kind of returns consistently, these would make these gurus absolute trillionaires within years. But investigations, they often reveal that their primary source of income is selling courses, not trading. Here's two examples. Pretty recent, Kyle Dennis. He was talking about 100% trading profit in just 2 to 3 days. Well, he ended up profiting 13.6 million bucks from this scheme. Warrior Trading, like Ross Cameron, he was fined $3 million while making absolute millions for misleading and unrealistic claims about the profitability of his day trading system, like how I made over $101,000 in verified profits. And these are all on the FTC websites, so you can just take a look at those. But that's just two of many. Real trading success, it's going to require an understanding of multiple frameworks. You got tech analysis, right? Just mastering these fundamental patterns like a support and resistance level, but recognize their limitations at the same time. So let's look at a head and shoulders, right? Looks great, but it's not a guaranteed 100% reversal signal. You have to see confirmation through volume and momentum, and even just the broader market context. Don't look for a reversal at head and shoulders when the overall market is moving upwards. Risk management, look at the 1% rule, right? Never risk more than 1% of your capital on a single trade. Now, obviously, as you get more experience, you're probably going to risk more. If you have a $10,000 account, what's your max risk per trade? It's about 100 bucks. And then market psychology. Markets overall are just driven by fear and greed. So when the headlines are screaming stock market crash, contrarian opportunities often emerge. When we saw the March 2020 COVID crash, well, that exemplifies what I just said. Those who bought these quality companies amid all that panic selling saw massive returns. So the takeaway from that is you just build a comprehensive trading education through multiple sources. Combine your books, your courses from institutions, and just paper trade before you risk real capital. And you want to develop your own system. A robust trading system contains essential elements. It's got entry rules. And this is just defining specific conditions for your trades. So only enter when price crosses above the 50-day average, for example, and the RSI is below 70. That's just an example. It's not a strategy. Exit rules. Have clear profit targets and clear stop losses. So an example is set your stop at 2% below your entry. Take profits at 6% above entry. 3-to-1 reward to risk ratio. Boom, right there. Position sizing. Calculate your position size based on your account risk. Takeaway from that is just document your trading rules in a written plan. Follow them for at least 100 trades before you make any adjustments. Now, market research, understanding what influences the market is pretty important. We have economic factors, we have interest rates, we have inflation, we have GDP growth. These all directly impact a price. So the interest rates hikes that we saw back in 2022, that did continue, they affected growth stocks valuations. Global events, we have political changes, we have natural disasters, we have technological breakthroughs. All of these create trading opportunities. For an example, clean energy stocks, well, they surge on climate legislation passage. Market structure, different markets have unique characteristics. You got forex markets are trading 24/6 almost. Stocks have specific market hours and after hours trading. Takeaway, just maintain a market calendar, mark these important economic releases. Psychological, trading psychology, it does determine long-term success, but in order to have that, you need a strategy that works. So we need emotional control, and one of the best ways to learn that is have a trading journal. And you document your emotions during your trades. So an example would be exited positions early due to anxiety despite no technical violation of my exit rules. That's always good stuff to know. And then following that would be discipline, right? Try to follow your trade plan exactly. So if your system requires 3 confirmations before entry, 2 is not enough. Performance review. Analyze your trades every single week. Calculate your win rate, your average win-loss size, your largest drawdown. So implement a pre-trade checklist, a post-trade review process for every single transaction. Listen, success in trading is going to come from developing your own methodology, right? Not following some prediction from some, quote, guru. Focus on education, focus on system development and psychological mastery. Remember, listen, I'm all for multiple streams of income, right? There are former hedge fund managers and owners who charge fees for speaking, selling books, website memberships. Right? Just because people sell something, it does not mean they are also not trading and doing well. And if you're seeing modest gains from trading in their advertising, consider them. So here at NetPicks, we don't make these outlandish claims because we know that everyone is different. Not everyone is going to trade the rule set that we give them in our trading systems. You're not going to see flashy cars. You're not going to see private planes in any of our advertising because that's not the reality. It's not the reality in the real world for traders, and it's not the reality for us. But the reality is success. Anyways, start your journey with paper trading, right? A strategy of interest. Maintain detailed records. Gradually increase your position sizes as you demonstrate consistency with your plan. Your goal is not to get rich overnight because that's not going to happen. But you want to build sustainable trading skills that can generate wealth over time.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.